Cool. Hey everyone, and welcome to this very first video that I'm recording for Bitcoin Ready.me. So, as you know, I've been sending these weekly newsletters every Saturday, which I've enjoyed a lot. They've, the fact of me having to write on a particular Bitcoin topic every Saturday has made me has helped me kind of to clear my thoughts and to present information in a very concise way. But at the same time, video is kind of different, and I would like to experiment with this medium as well, because I can, I can show more things, obviously, but I can also more casually discuss certain topics, show data like we'll do in this particular video. And I don't know, I'm just like trying it out. So let's see how it goes, right? And so in today's short, I hope, video, I've prepared a few slides to further discuss the topic of this week's newsletter, namely the Bitcoin's 2024 price surprise that I think we will experience. Now, what I mean by this price surprise is, before we talk about the surprise, let's quickly check kind of what people expect. So what would be the not so surprising scenario, right? And this would be the following. So here is the historic chart of Bitcoin on a logarithmic scale, where one can very clearly see that there are these cycles, right? There's this repeating pattern of a jump and then a bottom, jump and bottom, jump, bottom. And what is also very clear to see is that every next jump is smaller essentially than the prior one, and every bottom is also smaller than the prior one. So this is also known as having decreasing returns, right? Every cycle, and also having smaller drops, right? Because essentially of the growth of the overall size of the asset class, which is Bitcoin, right? And so most people really expect that next cycle will face yet another jump, right? And a smaller drop, similarly to what we have done before. Now, maybe very quickly to cover why this, because I think this is also helpful to visually understand why these halving cycles happen, why these cycles happen in this 4-year manner. And it's obviously, you've heard it thus far, but it's because of the halvings that are happening every 4 years. The first one happened here in 2012, end of 2012, and then we got the price jump. Second one happened in 2016, here it is, and then a price increase started reaching the top in 2017. Last halving happened in 2020, May 11, and then we got the price rise. And then the next halving is going to happen, it's either April or May next year, 2024. And here is what the effect of this halving is going to be in a very visual, unfiltered way. So basically today, the price is more or less hovering at about $30,000. What this means, right, is in its very basics, is that, since, as you know, Bitcoin has a fixed monetary policy. So every year, every day, every week, every whatever amount of time, more or less the same amount of new coins enter into the system. And we know, it was programmed in 2009 and nobody can change it. Satoshi Nakamoto basically defined the monetary policy. And as it is today, as we're speaking July 8th, the monetary policy stipulates that basically about 27,000 Bitcoins per month enter the supply through the miners, which would equal these 25,000 Bitcoins. If we assume an average price of $30,000, this would equal about $900 million of new supply of miners that are mining these coins out And, they're selling the vast majority of those coins on the market in order to cover their operational expenses, right? Electricity, maintenance, workforce, etc. And so more or less we can assume that if the price is staying at the same spot, there is at least about the same demand of buyers on the market, which are buying out these coins that are mined by miners, right? This is kind of like the equilibrium at which we are today, right? And the price is hovering at $30,000. Now, what will happen in April or May next year is that due to the, again, programmatic policy, we'll just enter the next phase in Bitcoin's monetary policy. Here it is, just, I guess, to illustrate it for you. I believe it was here. Yeah, there you go. So in 2024, we'll get this, this is the amount of coins that entered into circulation until 2012, then until 2016, it halved in two. And then every 4 years, basically decreases in two. And then this decrease will happen from here to here in about April or May next year, right? And so all of a sudden, from 1 month to the next, there will be twice smaller supply of new coins entering through the miners, right? But if demand more or less stays the same, right, because buyers haven't changed their minds, right? They kind of still buy Bitcoin for the utilities that they're buying. Then obviously the only thing that could really happen is the same thing that we've seen before, namely that the price will just start rising, right? Just like it has happened before. It's kind of pure math here, There's not much jumbo mumbo. There's not complicated science. I think every kid at about third grade, if not even younger, can understand this price in mathematical dynamics, right? Now, this is the basics, obviously. Now, the interesting part happens when started thinking about, hey, will this be just yet another slightly smaller jump? Let's say if here we had, this was a jump of about from the bottom until the very top. Obviously, almost nobody really buys at the absolute bottom and then sells at the absolute top. But just for illustrative purposes here, this was about, what was it? I think it was about 12-time jump, right? Yeah, 1,200% was the jump. So let's say most people would probably expect a jump of about 10 times. Instead of 12 here, let's say 10 times, diminishing returns. So maybe the next price top would be $150,000. And then maybe we drop with about 70% or so to $40,000-$50,000 as the bottom in the next market cycle, right? This is kind of like what most people expect. Now, why the more I look into data, I feel like we may be in for a surprise here, is because there's something very interesting that started changing during the last during basically the last few years. So here it is. I'm basically have been following this and sharing a lot of the charts of this Carrot guy, the Root guy, who has this Bitcoin strategy platform where he's sharing a lot of data from the public Bitcoin blockchain, as everybody can, just share it. Obviously, he's just making it easier to track and to understand. And so one of these very interesting data and charts that he's sharing here is basically a chart where we're looking at the price, obviously, clearly, of Bitcoin, but then he using other people's approaches also. He's dividing the amount of coins which have been mined and are available on the market into so-called illiquid supply and liquid supply, right? And actually, maybe it's a good idea to show them here how these have been moved. This is another data from Glassnode, provider of data. So illiquid supply is here, the blue, liquid is the orange, and highly liquid is the red. And how are these classified and divided is basically the following way. So illiquid supply is considered, so basically on the blockchain, Glassnode is following, various addresses, various public, well, basically all addresses are public on the Bitcoin blockchain, and they're clustering them into various entities, right? They are making assumptions as to whether one person or one company or one organization is owning a certain amount of coins, right? They're making such analysis. And if this one entity is holding more than 75% of the coins and it's not spending them for more than 4 months, they have found out over time that there is an extremely high probability that this entity does not really sell their coins, does not move them. It just keeps them for a very long time. And this is what they call, this is how they define and track illiquid supply. So entities which hold, basically more than 75% of the coins that they receive, they hold them and they do nothing with them, right? They use them as a store of value. Essentially, the major use case for certainly for the people in the developed markets, so to say, people like most people who I presume are watching this video who are blessed to live in a generally well-functioning Western financial system. Then the liquid supply is considered for entities which essentially have anywhere between 25 and 75% of their coins are being moved. So they're sort of liquid. They're not illiquid, they're not highly liquid, they're sort of liquid. And then the highly liquid coins are of entities which basically send, more than 75% of the coins that they receive, they also send out. So basically they're very active and very likely they're selling a lot of these coins. And so here you can see on this chart that at the moment the last halving was happening, May 11, 2020, there was this highest amount, like this distance is this area, and this distance is the longest in the history of Bitcoin in terms of liquid supply that was available on the market. So although the halving was happening and there was this supply shock, at the same time, the coins that were still liquid or highly liquid, essentially available for sale on the market, were at an all-time high, right? There's this argument that people are making that, or assumption, right? It's a hypothesis. A hypothesis, really, is probably the right way to put it. Is that the fact that there was record high amount of coins for sale essentially made this last cycle to be not as explosive as the previous two. And although there was a supply shock, it was mitigated by the amount of coins that were available. And so we didn't see that blow off top. And most people, even, the vast majority of people essentially expected that we reach surpass 100K even last cycle in 2021. Obviously, that didn't happen. And here is one explanation for that reason. Now, the very interesting thing, however, to note is that, ever since then, we're seeing a consistent decrease in the amount of these liquid and highly liquid coins on the market, again, following Glassnode's data. And here, here basically I've taken a snapshot from yesterday, and you can check. So if last time we had, there's obviously more coins on the market as well, but last time we had 1.6 million, 3.5, so that's about 5 million coins that were if I'm not wrong, if my math is not wrong, yeah, for a little more than 5 million coins that were liquid and highly liquid. Now, you know, just yesterday, July 7th or July 6th, here it says, we had like, so a little bit a little more than 4 million of liquid supply available. And as you see, there's a very clear trend for this liquid supply to be going down, right? And this is also very interestingly presented by our friend, the Carrot, the Rational Root, who has shown here essentially what he's built this, again, hypothesis model of the price. And what we see here in this model is that essentially these are, you know, this orange line that you're seeing here on top is the available supply of Bitcoins, right? And after every halving, there's less and less coins that are entering the market. And this is, you know, here on the blue part, we see essentially the illiquid supply that, well, no, actually, this is the price. Yeah, this here is the price, and the illiquid supply is this dotted moving line over here. And again, as we just saw at Glassnode's view, and here we see again on the Rational Roots a slightly different chart. During the last halving, May 11, 2020, there was the widest gap, or otherwise there was the biggest gap between new coins entering circulation and coins that are kept by long-term holders as a store of value and that are never moved, right? And ever since then, we've seen, based on these assumptions, right, and based on these metrics, we've seen an ever-growing illiquid supply of those coins, which at this point, you know, it kind of mimics a little bit here what we saw before the halving in 2017, you know, and here it looks even stronger, to be honest, although there's also like more supply. But here, see, like essentially the liquid supply was again significantly above these levels, and then after the halving we had a pretty explosive jump, right, from until almost $20,000, right? Whereas in the last halving, there was a significant decrease in the liquid supply, or meaningful, let's say, visible liquid supply. And again, this is a hypothesis people have as to why the last cycle might have had a slower, not such an explosive price rise. But looking at it now, we're not even at the halving point yet, but illiquid supply is growing very fast. We have actually, like, the very bullish case here is that we have many reasons to think why this supply is probably going to consistently, let's say, at least more or less stay on this level, and we'll be watching. You know, I'll be watching. So I've subscribed to Rational Roots. I'll be watching like in real time kind of how this evolves over time, and maybe would be sharing over this channel. Obviously, let me know in the comments. Jesus, well, so doing a YouTube video. If you like this content, if you're learning new stuff here, absolutely do hit the like button. Let me know in the comments if you enjoyed. Ask question in the comments, and definitely subscribe as well, as I'm doing this kind of, I don't know how often I'll be doing. I'm basically experimenting, but I might do it often. I'll try to do it every week. I'm not committing 100% I'll be doing it every week, but I'll try, and maybe sometimes I'll do more often, right? So let me know if this is interesting, if you would like me to share more of such real-time information as to how these data and charts are evolving. And so yeah, like what I was gonna say, there's a few bullish trends that are essentially, that may at least maintain this trend, if not strengthen this trend. And this is, wait, where is it here? No, this was over here, if I'm not wrong. Yeah, so there's actually a couple of trends here. So on the one hand, this is also from the rational root, but here I can probably zoom it in even more. Oops, oopsie. No, I didn't want to talk about the whole way of the supply on exchanges. So on the supply on exchanges, you can very clearly see. This is also an interesting and kind of important metric as to how many of the coins of Bitcoins are held on exchanges. And the less coins there are on exchanges generally, the more bullish this is for the price. Why? Because as you know, as history has shown, sometimes exchanges get to gets to exploit their power, right? And there is this actually very interesting movie about Quadriga CX, a Canadian exchange. You can watch it on Netflix. That is, basically where they sold Bitcoin to end clients, but they really just showed them digits on the on their application, and they didn't buy any Bitcoin on the back end, right? And that's also what Sam Bankman-Fried and FTX were doing last year in 2021, and that's why they went bankrupt. Clients thought they had, hundreds of thousands of Bitcoins, and turned out FTX had way less Bitcoin. So they would tell you they buy Bitcoin for you, they take your money, but in practice they don't buy it, right? They just tell you you have, and they show you a picture. It's like imagine me being a gold broker. I'm selling you gold, you send me $10,000. You want me to buy you gold for $10,000, and I take a picture of the gold, right? And I say, here's your gold, right? Just make sure, it's here, like nothing can happen to it, right? I'm keeping it for you. In practice, that's what FTX did, and they not only did it, but basically they sent the same picture, metaphorically speaking, of that gold to 1,000 people or 100,000 people, and they said, yeah, that's the same gold, we bought for you. And so that's why it's very important for people, especially, for as many people as possible, to be taking self-custody of their coins, because the more we withdraw coins from exchanges and we manage them ourselves, the less there is supply, and the less exchanges even have the opportunity to engage in such practice, right? And so here again, looking at this, it's very interesting, because over the whole history of Bitcoin, we've seen a significant increase in coins held on exchanges. Obviously, because this is kind of an easy way, right? I bought my first coins on exchanges. I've held, I held digital assets on exchanges for quite some time, I still very much believe they're a relevant use case, and definitely could be an okay first way for people to use. But I believe over time, the very natural, not just belief, it is super important that over time people should learn how to self-custody. And this is a lot of what I'll be bringing in terms of education on bitcoinready.me very soon, right? Because the more we decrease supply, the less exchanges can manipulate this, and large players, and just like the less supply there is, this can be explosive to the price of Bitcoin, right? So, okay, I kind of digress here, it took me some time, but this is very bullish for the price of Bitcoin as well. And then the other thing that's bullish is this chart, which I really enjoyed, again from Glassnode, where we see, this chart shows that there's all types of different entities that are accumulating coins way faster than new coins are entering in circulation. So these are crabs, fish, and shrimps. These are sort of various entities on the blockchain that are various sizes, let's say. I think shrimp are the smallest. Yeah, shrimp are the smallest. Let's say people who own less than 0. Oh no, from 1 to 10. Yeah, so fish. Okay, anyways, it doesn't really matter here. I think fish here, it says from 0.1 to 1 Bitcoin, from 1 to 10 Bitcoin shrimps, and then crabs from 10 to 100 Bitcoin, if I'm not wrong. Yeah, anyway, so basically the whole point of this is that 100% is essentially here. These percentages are amount of coins that are entering in circulation, right? Miners, essentially. What we covered here, these are the 900 million that are entering the market. And so basically what this chart is saying is that, a significant amount of shrimps and fish and crabs, so entities that are holding various sizes of Bitcoin are accumulating Bitcoin at an ever growing increase. Here's what it says. So small holders are accumulating Bitcoin faster than ever. Shrimps, people who hold less than 1 Bitcoin, are currently accumulating Bitcoin 100% as fast as new coins are being mined. Accounts that are holding between 1 and 10 Bitcoin are also accumulating 100% of new Bitcoins being mined. And on top of that, accounts with between 10 and 50 and 100 Bitcoins are accumulating 70% of the new Bitcoins being mined. Together, that means that about 275% of new Bitcoin being mined essentially is accumulated by these entities. So they're taking money out of exchanges, maybe some of them, and withdrawing them. Some of them are buying them, or maybe they're providing value to somebody else, and they're accumulating them. So essentially, individuals are accumulating Bitcoin way faster than it has been created, which is super bullish, right? And then last but not least, as I don't want this to become super long, but obviously we have the supply shock that is coming, that's programmed to happen. We have the second sort of supply shock that we saw here with the decreasing amount of liquid supply and the increasing amount of illiquid supply, which again is very clearly, we're entering a new phase in Bitcoin's development where this could create a significantly more bullish market next time. And last but not least, I covered this on one of the latest newsletters, right? But this is really huge what BlackRock is entering. Whatever we're saying, this continues to be very big. This week, Larry Fink went out on TV and basically, became the chief marketing officer of Bitcoin by saying Bitcoin is digital gold. He has now normalized essentially across all bankers, all asset managers, all traditional finance guys that Bitcoin is something that is, he said it's an international asset. It's a hedge against inflation. So this is just another demand shock that we we're slowly starting to face by people who will by smart people, but these also smart and like large institutional buyers, they take a lot of time to react. Like it can take a few months before they kind of set this whole thing. It can take even up to a year, right? And that's why it's, now we still, the average people still can outpace them, right? And that's why I think this year of 2023 is just an amazing opportunity. So much things are aligning. And obviously things can still go wrong. Shit can still happen, right? But the stars are aligning for a very, very strong market. I feel like significantly stronger than what we had in 2020. So I wouldn't be surprised if we have not just, if we have at least the same percentage gains that we had last time, probably even higher. So last time we had again 12x. If we have 12x now, that would be at about $180,000 till the next halving. Honestly, I think even this could be very easily surpassed thanks to thanks to all these things we mentioned. Although, you know, there are also negatives, and I should certainly make a video about the downsides and the potential risks, because there are many such risks, and it's not so black and white. The larger the market becomes, the more complicated it becomes, the more variables there are. Obviously, I'm here only covering the very positive things, side of the kind of what's happening, and there are risks and downsides potential to this expanding market, to the entering of institutions, which we may cover in some future video, whether these weekly videos that we post Saturday or some other videos that I may decide to post. Let me know if you would like to learn something in particular. I may do more of these videos. For now, I think this was kind of enough. Feel free, again, like, subscribe. Let me know if you have questions in the comments below. I've left some links for places where you can buy and accumulate Bitcoin. If not now, honestly, I don't know when. And yeah, very excited to be on the stuff I'm learning. I'm also actually learning a lot these weeks, but also on the stuff I'm building and the content I'm creating, which I hope to be able to share with you in the very foreseeable future, and to help onboard more people into this revolution, right? It's true revolution. All right, guys, this was it for today. It became a little longer than I expected, but it is what it is. Thanks again, and see you soon.